What's up, everyone? It's Scotty with Money Investing. So let's talk about Tesla. Tesla is going to be reporting earnings next week on Wednesday, I believe. That's going to be after the markets close. So in this video, my goal is to break down everything you need to know ahead of the earnings. So again, they're going to be on Wednesday, July 19th. After the bell, the expected revenue is just going to be a little bit over $24 billion and earnings per share expected at just under 79 cents per share. Now, first things first, couple housekeeping items. I do want to apologize. Obviously, the content schedule has not been, very much, there's not been a lot of videos that I've been posting because of the fact that I've been traveling. But I'm, again, flying back to India tomorrow. So I'm going to be back at it next week. And we'll be back at it. So by back at it, I mean I'll be posting literally 5 to 6 videos per day, stock analysis, macro updates, individual company earnings, of course, earnings reviews, summaries, stock trade ideas, stock analysis, a lot of things. I will be back at it, I promise. So again, make sure that you drop a like and of course subscribe to the channel. If you're just joining us for the first time, link to our Discord and Patreon is going to be down below if you're interested in joining us. Of course, getting access to all the buy and sell alerts, options alerts, trade ideas, everything's going to be included. Again, you get access to the trade ideas and the intrinsic value spreadsheet as well, which has all the fair values for a lot of companies that we're tracking on a regular basis. So first things first, this right here is going to be that earnings expectation. So again, revenues pegged at a little bit over 24 billion and EPS on a normalized basis, a little bit over 80 cents and on a GAAP basis, a little bit under 70 cents. Now, the main question for Tesla, if you haven't guessed already, which was also the main question in the last earnings, is going to be one word: margins, right? So margins is going to be the most important thing for Tesla because they have been cutting a lot of their prices. And for those reasons, of course, the actual delivery numbers were very solid. We had the second quarter delivery numbers at the beginning of July. So July 2nd is when Tesla released their second quarter numbers. They produced nearly 480,000 vehicles, just 300 short of 480,000, and delivered over 466,000 vehicles in one single quarter. Remember the times when Tesla used to do that much, not even that much in one single year? Yes, we've come a long way, and as most of you guys know, Tesla is my biggest position. Almost 30% of the portfolio is in Tesla right now. So yes, it is a very, very important earnings call, especially for me, and of course for a lot of other Tesla shareholders. So record delivery numbers, but the real question again is going to be how that translates over to actual margins, because what you'll notice from the last 5 quarters, Tesla's GAAP gross margins over here, you'll notice has been dropping pretty significantly. It's gone from 29% in the first quarter 22 to 19% in the first quarter 23. So that's, on a year-over-year basis, a full 1,000 basis points, or almost 10% drop. As you can see, negative 977 basis points. Operating margins have also come down pretty substantially from 19.2% down to 11.4%. That's a drop of over 779 basis points. So again, it's going to be a big of a question, whether margins are going to be higher. And that's, one of the reasons why operating income is also down pretty much flat on a year-over-year basis. But income from operations, again, was a little bit lower. Operating expenses actually was flat, and income from operations did see a pretty sizable drop of 26%, and net income was also lower, 24% on a year-over-year basis. So, again, it's kind of like the Apple story where Tesla's kind of building that install base and they're kind of getting Teslas in the hands of as many people as possible. Of course, they're able to lower prices because they're becoming more efficient. Cost of production's coming down, cost of raw materials coming down. Wright's law is playing itself through the entire cycle and the whole procedure that Tesla uses. So eventually I do expect Tesla to again continue to lower prices, make it more accessible for people, but then eventually you have to also figure out how to make money other ways, especially on a software basis, on FSD, on subscription, on insurance, on solar, other parts of the business, even robots and autonomous driving. All those things are going to be big potentials for Tesla that they still are yet to tap into, because those are high margin businesses. That's where a lot of the profitability will come from, because unfortunately right now we are seeing Tesla deliver record numbers, no doubt, and that's very good. But of course, margins are in question here. So after years of delays, Tesla builds its first Cybertruck. So that's also going to be coming online very soon. I think this is right here, first Cybertruck built at Giga Texas. This was reported on July 15. So we're expecting at least some additional details on the pricing points, the specs. A lot of things are going to be, a lot of unknowns, a lot of question marks are going to be hopefully cleared up during the second quarter earnings call on Wednesday, with respect to, again, production numbers, what's the delivery estimates. I think they're expecting somewhere between 200 and 500,000 units per year. And there's already over 1.5 million reservations at the moment. Now, even if we expect, let's say, 10% of those people go through with that reservation, that's 10, that's actually 150,000 people that will potentially go through with it, and times, let's say, $50,000. Let me just make sure that's right. So 3 zeros and then nope, 1 less 0. So there we go, 150,000. That's about $7.5 billion extra in revenue. Hopefully that math is right. So 1 says 100,000, 10,000, 100 million, 10 million, 100 million, 7.5 billion in additional revenue. And then of course, depending on the margins, what type of margins they can do, it will obviously, improve the margin mix for the overall business as a whole. But of course, if half of the people go through with it, let's say that we instead have 750,000 instead of 150,000, that's over $37.5 billion. That obviously puts Tesla, at a whole different level when it comes to revenues, and they will be able to eclipse, I believe, over $100 billion in revenue. I could be wrong here. Let's see, $81 billion last year. Yeah, so that will definitely help them eclipse over $100 billion if they are able to produce as many Cybertrucks as they have in reservations. So that's going to be the big question. Again, the pricing is going to be somewhere between, I think, $50,000 for a 250-mile range all-wheel drive. So again, that's going to be something important. Now, Elon Musk says that Twitter cash flow is negative due to ad revenue declines and heavy debt. Now, the reason why I bring this up, and it's not Tesla related, is because if Elon Musk is involved, Tesla is involved, right, in one way or another. And Elon Musk obviously overpaid $44 billion. I did several videos on this last year and how it was not a great acquisition from Musk, paying $44 billion, $13 billion in debt to acquire Twitter, which unfortunately Mark Zuckerberg literally started Threads and is almost up to half the user base Twitter is, with literally 6 people, right, and spending little to no money on building that application. So, it is you live and learn, and I think Elon Musk is definitely going to learn a lesson here, and hopefully Tesla doesn't get too involved, because again, Elon Musk has to find capital. He has to make this a self-sustaining business in order for it to run on its own, because if it doesn't, guess where the money's going to come from? Tesla shares. Elon does still own a lot of Tesla stock, 19 to 20%. I think might be a little bit less, but he does still own a lot of shares. And if he starts selling, we know what happens, right? So that's something that's a potential risk that we have to keep in mind. And he pretty much tweeted, I think, yesterday, we're still negative cash flow due to 50% drop in advertising revenue plus heavy debt load. Need to reach positive cash flow before we have the luxury of anything else. So, that's something to keep in the back of your head. If Twitter never gets there, because the ad monetization, in my opinion at least, some people do disagree, but in my opinion, it's very, very difficult to monetize things like WhatsApp and Twitter and Threads. It's much easier, video, images, it's much easier to monetize those and place ads on those things. It's a whole different game when we are trying to monetize text. It's very difficult, right? So Twitter's tried and not been successful. Threads, I don't know what the end game is, but as long as they're generating more users, I guess that's good for the stock for now. But again, I don't know what the end game is for Threads for Mark Zuckerberg, but we'll find out eventually. So again, that's something to keep in mind. But overall, going into this earnings call, I am very optimistic that Tesla's going to beat on earnings and revenue. I think the real question, once again, is going to be the margins, whether margins come in stronger or not. Next resistance and target is going to be $312. So this right here is going to be that level to watch. And of course, last earnings, Tesla did drop quite substantially. So you can see that we did drop a little bit over 9.7%. And at the time, it was still trading in the 150s, 160s, which is exactly where my fair value still is for Tesla. I would love to buy a lot more shares, be a lot more aggressive at those prices, of course, if and when it actually trades at those levels. If it doesn't, next target 312, I'm happy to de-risk a little bit. I do still have some calls that are in the money that will force me to sell some shares. That's totally fine, up a lot, and want to take some profits off the table. But of course, it'll still be my long-term hold, still banking on a lot of the full autonomous driving, FSD, and of course, a lot of other potential opportunities that Tesla has. So nonetheless, support level is going to stay put in the 280s, 275, resistance 312, all the way down to as low as $240. So those are going to be some support levels to watch for Tesla. And like I said, it's going to be quite an interesting earnings call with lots of new potential updates, and not to mention the margins. That's going to be the big question. So hope you guys enjoyed this video and found it helpful. If you did, make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time. Link to our Discord and Patreon is going to be down below. Resistance and target 312, support 275 down to 240s, my fair value in the 150s. Got covered calls, got shares, optimistic, but the real question is going to be margins. Happy investing. I'll see you all in the next video.